stablecoin issuer and blockchain startup Paxos has become the third federally regulated crypto bank, scoring a federal trust charter through the U.S. Office of the Comptroller of the Currency. Their new Paxos National Trust entity will hold your crypto, offer stablecoin management, and offer other services. Joining us now to discuss is Paxos General Counsel and Chief Compliance Officer Dan Bernstein. Welcome, Dan.
Thank you for having me.
Just, off the top, what is your reaction to JP Morgan this morning now offering a Bitcoin fund to their clients?
I think what we're seeing here is the institutionalization and the growing acceptance of digital assets in the space. And I think that's really driven more than anything else by the regulatory environment. I think that larger and larger institutions are seeing that the water is warm for digital assets. And that's because the regulators like the OCC, as we've just seen, are accepting and understanding the risks and allowing and encouraging even their regulated institutions to get into this space.
You mentioned the institutionalization, you are actually, Paxos has become a crypto bank. Explain the significance and what is really happening here.
Sure. So on Friday, Paxos received the preliminary conditional approval from the OCC to offer a national trust bank. What that means, in effect, is that the OCC reviewed the application of Paxos National Trust to open as a national trust bank. They reviewed our business plan and understand that and agree that the businesses that we operate and plan to operate are acceptable businesses for a national trust bank. They understand and agree that the team that's in place at Paxos has the experience and expertise to carry this out, and that this is a viable business model and something that is appropriate to go forward. And so it's just preliminary conditional approval. The next step really is we've told them what we are going to do in terms of building the National Trust Bank. Now we have to go and build it.
Mm-hmm. So Anchorage and Protego are also crypto firms that have national trusts that were born in the crypto ecosystem. Meanwhile, Kraken and Avanti Bank are state-regulated crypto bank entities after securing special purpose depository institution charters. So through Wyoming, I wonder, what are the differences? Can you spell that out for us?
Sure, and there actually is a first here because Paxos is the first de novo national trust bank to be chartered by the OCC, by a national regulator. And what that really means is that Paxos is maintaining a dual trust structure. We have a New York State Department of Financial Services trust bank that we have operated since 2015. And now we've stood up a new bank through the National Trust Charter. It basically means that we have clear nationwide authority to operate, whereas New York is the gold standard for state regulation in the digital asset space. The OCC is really the gold standard for national regulation in this space. There are a number of other states that are getting into this space as well. It's a really exciting development across the board for our space because regulators are not just thinking about allowing digital assets and digital asset regulations, but really thinking constructively about how are they going to accept this business? How are they going to control the risks? And while 5 years ago, 6 years ago, when Paxos got its first charter, maybe regulators didn't know as much about the risks associated with the digital asset system, and therefore were more conservative. Now there's a little bit more trust in terms of who are the trustworthy providers in this space, and how are they going to be able to operate effectively and operate in a way where they can identify their own risks and control their own risks, and therefore be appropriate regulated entities in this space.
Good morning. Just to look at a bigger picture question here, one of the ideals behind cryptocurrency and behind Bitcoin was to disintermediate the banks, basically to kind of get rid of the banks. And now, these big players in crypto are essentially becoming banks. Is there a tension here?
I don't know that it's a tension. I think that it's probably the culmination of what you would expect to be the natural maturation of this market. You have certainly, Emily, what you're referring to is the more libertarian, the more hands-off approach that gave rise to this space, and that will always be part of our history, and that will always be a segment of the market. Paxos was founded on the notion that we're going to ask for permission rather than forgiveness. We are going to be regulation first, and we always want to be the most trustworthy provider in the space. And therefore, we're building up our regulatory stack to meet that moment. And the reason for that is, well, first of all, it's the right thing to do. But second of all, we believe that that's better from a competitive business perspective. We are partnering with larger and larger companies, traditional financial institutions, major market participants. And those players that have maybe more conservative risk profiles clearly want to be partnered with a trustworthy entity, and regulation is what is how to signal to the market that we have that kind of trustworthiness.
Dan, good morning. You know, one of those partners, of course, is PayPal. You guys are basically the back end for them, or the engine behind their crypto trading. So what does being a bank mean for that kind of a deal?
Sure. Thanks for the question, Lawrence. And the reason, the background of that is, we have really built up this regulatory structure. It's really a validation of the approach that we've taken. PayPal is a really important partner for us, and we're looking to and have been partnering with a lot of other entities like them as well. And it goes to what I was just talking about. Companies like this are looking for a regulated partner. They want to be absolutely sure they are operating within the law. They want to trust but verify, and verify again. And so that means having a partner that has minimum capital requirements, that has a regulator that's examining us regularly, that has audits and policies and procedures that is going to be there when you need them, and is not going to get you in any trouble in partnering with them.
So Dan, of course, you also have a deal now with Venmo, PayPal subsidiary. What will it look like with Paxos as a bank? What will that relationship look like?
Yeah, I think you'll have to talk to PayPal about that. But clearly, what we have here is the regulatory stack that more and more partners are going to want to work with us on.
While we're talking about partnerships, you also have a partnership with BUSD and HUSD, two stablecoins from Huobi and Binance. Can you tell us a little bit about that and what you think are the future of those stablecoins? Are they safe? Are they properly backed by fiat? What is your take on those stablecoins?
Sure. Thanks for the question, Emily. And these are part of our stablecoin as a service offering. What Paxos does is we provide all of the regulated financial services activity. We are able to work with our regulators and become the issuer of these tokens, similar to our Paxos standard token. We are the issuer of BUSD in partnership with Binance, and that means that we are responsible for custodying the reserves, for the mint burn of the tokens. And it also means that the reserves themselves are overseen by currently the New York Department of Financial Services, and that we are able to ensure and encourage our customers and let the market know that these are reliable reserves, that they are placed in very secure assets. And we also have our attestations clearly posted on our website. We get monthly attestations by an independent auditor to verify that the number of tokens equals the number of dollars. There's no question about it. You can go to paxos.com/attestations and see them right there.
These coins are pretty popular. Is there any chance that they could eventually overtake the market of the Paxos stablecoin itself?
Oh, definitely. I think that we are there for our customers and for our partners. And when we are talking about being financial market infrastructure for other entities, that means that their interests come first. That we are partnering with enterprises, and that we are not in this for a Paxos retail brand. We don't want to be competing with our customers. And therefore, we find this to be a competitive advantage because we don't want to be, we don't want our partners to be thinking that they're competing with us and that we're going to steal their customers ultimately.
Well, Dan, we can't talk about stablecoins without the now $50 billion elephant in the room. That's Tether. They recently had a deal with, they're now permitted to be traded on Coinbase Pro. How worried should the markets be about that, given that Tether is, kind of the opposite, where they're more about asking for forgiveness than about permission?
Yeah, it's a great question, Lawrence. I think that Tether has become as you say, an elephant in the room in the crypto space. There are a lot of crypto transactions today that have Tether as the dollar leg. But I think we see a tremendous future potential in stablecoins in the regulated space. Currently, stablecoins are used, as I say, largely in the crypto space, but the future for stablecoins in payments and remittances is going to be huge. And the OCC, for example, recently put out an advisory opinion stating that OCC banks can host the blockchain rails in connection with payments and remittances for stablecoin systems and others. And I think what you're going to see is those companies are not going to use Tether. They're not going to support an unregulated stablecoin. There's going to be a lot of interest and a lot of excitement for regulated stablecoins to be adopted by the traditional financial markets and traditional financial institutions.
All right. Dan, thank you so much for weighing in on the stablecoin space, and congratulations on your latest federal trust charter.
Thank you for having me.